The local index looks set to start trade on a weaker footing this morning, with investors sitting on the sidelines ahead of a key U.S. inflation report later. For more analysis of how the local trade is faring this morning, we're now joined by Matete Thulare, head of foreign exchange execution at Rand Merchant Bank. Matete, good morning. Let's start off with this. Give us an overview of how the Rand has been performing throughout the week and the factors driving trade.
Good morning, Hugo. I suppose it's finally Friday and the end of a very long, tumultuous week. I think, if anything, the Rand did hit 15.20 yesterday, which was the best levels that we've seen in about 2 months. But obviously, on the back of the risk aversion after the hawkish ECB meeting yesterday afternoon, and as you say, we faced another stern test from this afternoon's US CPI release. We have seen the Rand slightly weaker and obviously trading at 15.47, which is where we started off the morning. What we have seen is that there's been sharp global risk aversion. We've seen US equities down at 2%. There's also been increases in a number of lockdowns in also Shanghai that is adding to concerns. Already, also when you look at China, I mean, already the inflation number there is already slightly milder than expected. So we have seen the dollar seeing some safe haven flows. Obviously, that means that the risk will be slightly weaker. But besides all of that, I think the market is also, still looking at the sentiment with regards to what's happening with regards to COVID out in China, the geopolitical tension out in Eastern Europe, the commodity markets, as we've seen, oil above 120, also the central banks, and obviously the word that has been bandied around quite a lot, which is inflation. So that's also now adding to key concerns globally, but also over and above that, it's also about politics. We do know that locally we do have the local policy conference that is coming in next month, and also the elective conference at the end of the year. So that's also going to factor through in terms of how the Rand plays itself out for the last 6 months of the year.
Well, let's bring Europe into the picture. The markets are also digesting the outcome of the European Central Bank policy.
Yeah, so look, I think that was quite an interesting meeting yesterday. The ECB bringing down the curtain of years of ultra-loose monetary policy, and they've committed to a quarter-point increase at their next interest rate meeting next month, and they have started signaling bigger interest rate hikes into the close of the year. Now, this is concluding 8 years of negative borrowing costs, and this is affirming a plan that was laid out last month by President Christine Lagarde. She has said that the ECB is looking at bringing more clarity to the outlook, which is more than expected, given the fact that this is the first interest rate hike in more than a decade. So this is obviously trying to confront record inflation that we are seeing globally. And the ECB yesterday obviously coming out to say, look, if it's going to be really data dependent, and obviously they're going to be slightly more aggressive, if anything, if the inflation numbers obviously start peaking higher. If you look at it globally, Hugo, I mean, more than 60 central banks have already raised their interest rates this year. And, as I say, everybody is trying to tackle the soaring inflation numbers that we are seeing that is squeezing households and prompting large-scale government support, especially on the back of what happened in Eastern Europe with regards to the Russia-Ukraine situation that is driving energy costs really higher and obviously adding the fuel to the fire with regards to this inflation outlook for the next 6 months of the year.
The credit ratings agency Moody's has placed most of Transnet's credit ratings on review for a downgrade. Talk us through those developments.
Not an easy time for Transnet. I mean, Moody's has come out to say that it's going to be increasingly concerned over Transnet's exposure to weak liquidity management and obviously high refinancing risk. Transnet has about $1 billion in the international bond market that matures next month, but it doesn't currently have sufficient funds to repay bondholders. So now Moody's is obviously believing that a sufficiently large international bond issuance prior to July is becoming increasingly challenging given the current market conditions that Transnet is facing. Now, the delay in securing the refinancing commitments has raised concerns around Transnet's financial policies and their governance, which is obviously adding to the uneasiness about weak compliance and the reporting that we have seen from Transnet. Now, these weaknesses include the company's repeated delays in publishing their audited financial statements and the inability to obtain unqualified audit opinions, and obviously the recurring breach a debt covenant. So Moody's has given that outlook to say, given all these negative sentiments around Transnet, they are highly concerned about what's going on there.
I'll ask you to tweet your response to this, but Twitter Inc. anticipates a shareholder vote on its $44 billion sale to Elon Musk to happen by early August. Your thoughts on how this vote is likely to go?
So look, I think they have come out to say that they're expecting this vote to come by either next month or early August. I think they're really continuing to constructively work on completing the deal. But it's quite interesting because Elon Musk's lawyers have warned Twitter already earlier this week that he might walk away from the acquisition of the company if they fail to provide the data that he's looking for with regards to spam and fake accounts. So it's not clear how much confidential information about the user base that Twitter will share with Elon Musk, but it seems like the Twitter board now plans to grant Elon Musk access to a massive stream of firehose data that comprises of more than 500 million tweets posted each day. So the data not only comprises of real-time record of tweets, but also the devices that they tweeted from, as well as information about the account that tweeted that specific information. So now it's being argued that the data stream is essentially, for understanding the amount of spam and the robotics activity that is involved on the Twitter platform. And I think this is a figure that could influence the company's ad revenue, and obviously it could also lead to a bit of argy-bargy in terms of how much negotiation will go into the deal, and obviously the voting that will take place in the next few weeks.
Matete Thulare, watching the markets for us this morning. Thank you for your time.